Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Tuesday, March 24th, 2020. Wanted to talk a little bit on the XLF, the financials. Decided to go ahead and add that as an active trade today. In the notes I stated clearly it's certainly a counter trend trade, catch a falling knife trade, whatever you want to call it. But I figured the risk reward is attractive enough. It's all about, taking a certain amount of accepting a certain amount of loss to try to gain a certain amount of profit, and I very well may add additional targets to the trade. That's why I set the stop down there at 17.95, depending on how things get going. So what I wanted to say is we haven't seen any, at least I don't see anything in the headlines, any news catalyst that would justify this, but it's the same thing that I've been talking about now for just over a week. Extremely high pessimism, put to call ratios, the VIX still being elevated, off its highs, sure, but still at extremes, and that's why what it's done is put a temporary floor, even though the fundamental, the macro picture hasn't gotten any better, it continues to deteriorate. The only thing I can see on headlines today is Trump uses the Defense Production Act for virus test kits. That shouldn't move the market. He's just going to try to procure about 60,000 coronavirus test kits. Again, we've seen much more fundamentally positive headlines with Fed, massive moves by the Fed and everything else. So now where I'm going with that is, okay, so this market is just it's technically induced. We've had these divergences building. We keep getting these pops, but at the end of the day, recognize it for what it is right now, and that's why I called it an aggressive counter trend trade. This is it. Here's the financials. This is a bullish falling wedge pattern, and that was the premise for the trade, a breakout of the bullish falling wedge pattern. There it is, that big green candle right there. The 30-minute candlestick, that's this time frame I'm trading off of here. That 30-minute stick was finalized at 10:30. Impulsive, solid, but I'm going to go over some things such as where the S&P 500, how that hasn't broken out. We can draw an alternative trend line here, and I might as well do it because I have a similar one on SPY. That might prove to be resistance, so if we get a reaction, what I did there is I simply added the same starting point back here. That is the highs from March 4th. And use that as a starting point. Just trying to tighten these lines up. It bugs me how they sometimes snap to a different level. And so we'll watch that. And that's the first target. You want to take quick profits if you even took the trade. Like I said, please pass if it doesn't mesh with your risk tolerance, your comfort level, your views on the market, or anything else like that. I'm just looking for a good old-fashioned oversold short covering rally. That's it. Oversold bounce. Now here's the thing. I may allow this trade to run if the news follows, because very often, as I say, the news will follow the charts. Technical breakdowns. I can tell you, I've done this many years. I've had clear technical breakdowns, bullish chart pattern breakouts. And with absolutely nothing in the headlines, the media comes out and tries to assign whatever they can fit. They try to retrofit a headline onto every big move in the market. Sometimes there are catalysts, absolutely, many times there are, but sometimes there's no catalyst. It's technically induced, but then the news will follow. So what I'm getting at there, so where I'm going with this is, if this starts to pan out, assuming we don't get stopped out, even by the time you hear this video and you start playing it, we could turn around and drop right now. We're still at resistance on the S&P 500. I made a decision to go ahead and add this one in expectation that the breakout in the financials will pull up the S&P 500 and cause it to break out. I'm going to get to the S&P 500 in a second. So there's your targets. Still about 11, better than 11% upside if we hit T2, and if I decide to extend this to T3, if there's any favorable news, or I like what I see price action wise, I may extend that target up there. That's about 18, better than 18% from where we are. I gave you additional targets for those of you who like to juice things up with leverage. There's FAS, the 3-time bullish financial ETF. So obviously, if you're using this, you're typically exposing yourself to 3 times the loss potential on the downside as well. So leverage cuts both ways. I mean, really what you should be doing if you're trading this is take a 1/3 position size that you would normally take in XLF, because you have the 300% leverage. So again, I know traders like to use these things, so that's why I passed that along, just those unofficial targets. And there's the targets I posted this morning, resistance levels on XLF. The official trades I always adjust do an adjustment for the targets, but I think that's a good number right there. We'll just hold that for now. That 1984 level, it sits a little bit above the top of that resistance there is about 1988. So I'm cutting that one kind of close, but I think if we get the short covering rally, you're going to see more and more shorts squeezed out of these financials, regardless how abysmal their fundamentals are right now. We're seeing reprieve, and this is why I like to do these videos. I like to cover everything I'm seeing. We're seeing reprieve in the financial sector. In fact, I'm sorry, the energy sector, and that is up right now over 10%. XLE. Let me show you. I had a price alert today trigger. This is crazy. It was 1019. I was too busy to check it. I knew it was a little stock I had on here, MCEP, and my alert went off at. Let me see where that was set on what time frame. Hold on one second. Not sure what time frame. I must have had that downtrend line here. That's what it was. And it took that trend line out. Got an alert this morning. Look at this little sucker. Oil and gas, E&P stock. So it's up, right now it's up 150%. I mean, this thing was up at the highs about 267%. So what you're seeing here, of course, is an explosive short covering rally. Energy sector. And look, it's not random. We had, the charts were setting up pretty bullish here. I'm still sticking with this 30-minute time frame. And this is it. These are we call bear market rally, oversold. Like I said, I love trading bear markets for two reasons. I love shorting stocks in a bear market because they fall a lot faster. The S&P 500 has wiped out over 3 years of gains in just a matter of just over a month. But then the bear market rallies are even more explosive than bull market rallies. So when are you going to get 10% in a day on XLE? Not that I'm in XLE. I'm in the financials. Like I told you, I want to talk about that. I told you I expected on the next next rally, the S&P 500 to outperform, and it has. Here's what I wanted to talk about on SPY. We're struggling with that downtrend line. So if we can get a little bit higher today, as I'm doing the video, you can see where we're at, 238. We're pushing against that downtrend line. And again, I decided to make the decision to get that trade out because it takes a while to screenshot these charts, put the notes, adjust the price targets, and get out to you. So I wanted to kind of get in that one in front of it. Remember, if you guys remember a few weeks back, I did the same thing with LQD. I shorted it actually at trendline support right here this day. That was March 9th, while it was still at trendline support, anticipating an imminent breakdown, which we got. So had I waited, what would have happened is by the time I got it out, if I waited to the next day, it was falling, we might not have had an objective entry. So that's my trading style. It is aggressive. It's what I call an anticipatory trading style. A lot of times I'll anticipate a move before it even happens, or most traders will wait for a breakout or breakdown. But then sometimes the market denies you that objective entry because it can be tricky. On SPY, for example, you had this little minor downtrend line here. This is the primary trend line I've been focusing on right here for a while. And we hit it back here in pre-market, or we hit that 250 level in pre-market. But the trend line is pretty important. But you see what happened is if you were waiting, let's say yesterday, to take a breakout of this trend line or above that 228 level, see what SPY did? It gapped way up. Futures hit lock limit up overnight, and that's why I waited this morning. There was nothing, with the futures being locked down, SPY can still trade, but it's only going to go so far. So I wanted to see what the market opens. So either way, that's where we're at now. And look, this could be it. This is a big pop, 6% gain right now in the SPY and the S&P 500, and we're at resistance. So like I said in the post earlier, you want to short. You can short, objective short right here with a stop above. It's certainly objective. It's not the way I'm going. That's why I didn't give you. I give you a pullback target if we do get rejected. 228.02 should quote unquote act as support. So that's a possible scenario right there. One that I'm willing to ride out. Hopefully won't take us out on our XLF trade. But with this move up right now, my guess is these shorts are getting squeezed hard. They're feeling a lot of pain. So they're probably not going. The market probably won't give them that objective entry with a pullback to get out. Or longs that don't want to chase a 6 almost 7% move up. Those longs might be waiting for that ideal pullback to 228 if they're now convinced. When I say longs, want to be longs, those that want to be long. And I may be wrong. Maybe I'm the greater fool today, and we reversed here. But again, that's what stops are for. So all right, let's move off this. Just it will look better if we take that level out right there. And there's also an alternative trend line I can draw on SPY as well. I have it on. This is closer to my ES chart, which I'll get to here in a second. And it's this one. It comes in and captures some of these recent highs there, and that trend line we gapped above. I'm going to move it just to keep this chart clean. And let's see what happens so far. 1, 2, 3, 4 30-minute candles testing that level. That's what we need to do, guys. We need to pop today's highs, and if we get rejected, we need to hold and bounce off 228 ideally. There's a big old gap down below. That would be your next support if you're looking for levels that could act as support. But again, we have technical cross currents. We are in a downtrend. And again, I like to trade counter trend trades. That's just me. It's aggressive. Some people are trend traders. So if you're a trend trader, you recognize a trend and then you short bounces back to resistance, and you do that as long as it works. And when it stops working, then you stop doing it and you recognize a new trend. Problem with trend traders is by the time they recognize the market's in an uptrend, the train's probably going to have left the station, and they're going to miss out on the bulk of the move. So, like I said, the divergence and all that say that we could be poised for a bigger pop, but would really help now is some real, a good news catalyst, not just hey, Trump's going to, force companies to make more, masks or test kits, whatever it was. All right, that's SPY, QQQ. Oh, by the way, like I said yesterday's video, because SPY has a lot of those beat down sectors, more restaurants, it has financials. The NASDAQ 100 basically doesn't have any financials. The weighting in the financial sector is 0.30, so 0.3, less than 0.3 of 1%. In the financial sector, so virtually no financials in the NASDAQ 100, and so that's again where I went from trading, in addition to the financials, I'm long ES today instead of NQ, where I usually like to trade NQ because there's more juice in those tech stocks, but not that because they haven't been beat down as much. So you're not going to see as intensive if we get more upside. That is, you shouldn't see. You should see more upside here in these beat down energy stocks. Again, bigger weighting there in the S&P 500. You have I already showed you energy up quite a bit today, XLE, and part of the let me grab that XLE chart. There it is, right there. But at resistance. So this is what we need to do here. Market S&P I showed you is at resistance. XLE is at resistance. We've already pulled back off that resistance level. Ideally, you want to see it hold. You don't want to see a full backfill of this gap. But if you do, it still keeps the potential alive for a bigger bounce. We can do this. Come on back test. We could even do this in the energy sector. Right now I'm staying clear of that. There was a big move today, but I'll take another look at that. Like I said, I'm not just trying to keep my focus relatively narrow right now. And I think XLF, like I said, it's certainly one of the best performing sectors today. So we'll just focus on that for now. And if I see an opportunity elsewhere, I'll be sure to add that. All right. Let's see. What else did I want to show you here? Yeah, that's what I want to show you. Okay, so this was another reason for why I expect a breakout in the S&P 500. Like I said, the financials have broken out, so hopefully you'll get more buyers coming in there and continuing to buy, long stepping in, bargain hunters, as well as short sellers getting squeezed out. But this is the trend line that I've had right here, this one, the lower trend line, and it's now purple. That's the one I've been showing on this ES chart for a while, right there. And I had this that morning we popped up. It hit that 2500 resistance level in reverse. That was proved to be a whipsaw, a false breakout. So you had a lot of reactions going back here. I'm showing you all the reactions, and I just want to make mention that was the trend line that I had. I added this one today, this secondary trend line here, because we had only 1, 2, but a potential third reaction. We've so far pulled back if you look really close, so it's valid now, and it kind of just reinforces what I said. If we can pop that and we can go much higher today, the S&P would have taken out this, what I call a BOD trend line. You guys have probably heard me use that term before. This is something I made up called a benefit of the doubt trend line. If I can look at a chart and draw two trend lines, two horizontal price resistance levels, and they're close by, in close proximity. In fact, I'm going to add a price resistance level right now. It just jumped out to me. What's been standing out, a lot of these lock limit down or up periods right here. You see these blue lines, that's when the futures locked down, hit the 5% down, and one time it hit a 5% up limit, like last night. That was right here. You can hardly see it. Those levels often come, traders start to then trade around them. Not so much there, but this one, there's a big level. A lot of reactions around that level that I see there. Key reaction, your previous reaction high there. So now that's an important level, I think, the 2386-ish level. And if we pop it, we also take out the trend line. So by benefit of the doubt, I mean, when you have two resistance levels in close proximity, if you want to be safe and give it the benefit of the doubt, wait till the second one is taken out. That way, if a lot of traders are watching this, but you also have a lot of traders watching this trend line, and they're waiting for that to break out, then there's your all clear. If it breaks out, you're going to have this subset of traders watching this trend line jump in. So that's anyway, it's a safer bet. But again, sometimes I like to get in front of these if I expect a breakout is likely. We could probably add another trend line now. It's not a great fit, but there's a trend line, an uptrend line for active traders. Want to keep a tight stop on ES. There's your little uptrend line right now that should hold. Maybe we come and back test this lower trend line. But again, there's your important number right now. It'll probably be still valid when I get this out to you, unless we just some tank intraday about today's high, give or take, whatever that is, if I can zero in on that. 2388 or so right there. So we'll call it 2390. If you can see ES pop 2390 today, that should open the door for the move up to the next target there, about 2460. After that, you have 2501, and then this is pretty big resistance up there. Let's just take it one step at a time. Let's just see if we can pop this level first. Then that would be a target. And so this is my target zone right now. If we can get some more traction here and pop today's highs, 2460 to 2500, we'll call it. So there's ES for you ES traders. You can certainly trade NQ. There's nothing wrong with it, but like I said, I expect it to underperform. If I can get a chart loaded here. Here's NQ on a daily chart. And again, I just want to show you what I've talked about for the last week or so here. This has been, the market has been defending this level here, about 69.17 on all those lows. This was a whipsaw so far. It proved to be a false breakdown. It broke down below that range. We popped back up. So that is a, from a technical perspective, that's a bear trap, because we broke a support level that the market had been holding for and testing for about a week or so. Pulse a break below, but we snap back above it. And so far, off the lows there, I'm going to move that line to measure it for you, but it's been a pretty big move in NQ, about right where we're at now, about 12%. All right, so PPO is turning up at low levels, and let's look at a shorter term chart. Let's go down to let's do a 1 month hourly chart. All right. So there's that trend line yesterday that I showed you could use to, contain the pullback, and we've remained in a near-term uptrend. Like I said, a little bit steeper trend line. I'm not crazy about the fit. Let me make it similar to that one on ES. Let me put it right there, drag it down. That could spark a move down today, but you also have 72.72, actually about 72.73 was a resistance level / target here. That's been taken out, so that should act, and so far today has acted as support. But so here's the same story on NQ as I just showed you on ES. This was a downtrend line I've been tracking for the last several weeks, and we had that breakout the other day, proved to be a false breakout. As I say, fewer things in trading are more bearish than a failed long side breakout. So after that, that breakout failed right here. We had a sharp move down, but then on the flip side, that was the big level right there, that 6,900-ish level, and so that was a failed breakdown to the downside, and it was recovered. So that is, so whereas that was bearish, and it proved to lead to a drop, this recovery here was bullish, and so far it has led to a pop. So if you if your head's spinning right now, then that's welcome to this market. You just have to adapt, adjust, recognize what's going on. And again, bigger picture, like I said, for weeks now, what I haven't waffled on is the fact that the downside risk or the potential for downside was not favorable anymore for shorting because of the extreme overbought conditions. So if you can't get your head around how can this market not be cratering with all these businesses still shutting down, no signs even remotely close to a cure or a vaccine. Welcome to the world of technical analysis. There's other factors besides fundamentals that go into it, especially in the near term. Fundamentals will take the market to where it needs to be in the long term. Make no mistake about it. That's why Warren Buffett is so successful. He uses fundamental analysis, and he's willing to hold, and he'll sit on his Coca-Cola or whatever position as long as he believes in it. He'll sit in it for years. He'll ride out the drops. That's fundamental analysis. This technical analysis is more like it's more accurate in predicting short-term moves. And it works very well in long-term moves, of course, as well. You just have to, actively trading. You're not going to trade off the monthly charts. You're going to trade off these charts here. All right, enough on that. The other line you can see I've added, just like on ES, I added a secondary line or a BOD trend line because I want to now include that reaction. And so far, that's kind of what's stalling this rally. Now, we're up quite a bit today, so that may provide some headwinds as well, just the sheer amount of gains so far. This is NQ, remember, ES is up a little more than that. NQ is up about 6%. But that's a secondary trend line right there. So if we can pop above that, ES takes out today's highs, NQs take out today's highs, then you can see the next resistance levels. We have a zone up here about 75.40, and again that 76.20 level that was hit right there the other day, last week, and that would be about another 3.25% upside. Again, that's on NQ. So I see more upside on ES. And so hopefully we'll hit at least our first target on XLF. And if we do, maybe I call that trade in early. I'll let you know my thoughts if and when we even get there. But first things first, we have a little work to do on the, what the ES and S&P, SPY popping today's highs. And there it is, still at that level. So you got to give it to technical analysis. These lines. Here's a line I've had on this chart for well over a week now, and look at it, stopped it. I mean, like a brick wall so far. It has stopped the S&P 500. So that tells me if we can pop it, what you probably will see is not just one of these small little candles like this. You'll probably see once it goes with conviction, those highs, you'll probably see a big green candle as the buy programs, the algos hit, individual traders, besides the robots, buying, individuals will buy and all that. So that's what you're probably going to see in a quick run up there. There's I have a minor resistance level here. That's about, I'll show you the pop-up box, about 244.93, call it 245. May get some resistance there, but it should open up. Remember, T1 was the target. It was hit already once in pre-market back here. It's not showing because this doesn't show pre-market trades. And that's still the same next target right now if this trend line breaks. If you are swing trading SPY, then I'm looking for a move up to that 250-ish level again. That's about 5.5%. And if SPY does that 5.5%, XLF should get up here to that first target, and that's only 4% for XLF. Wouldn't surprise me to see XLF get up all the way up there to that T2 level, 21-ish. I mentioned SVXY the other day. Again, is something to hedge against, or to even a pure play on just a bet that the VIX has at least topped out near term. Went over that extensively, showing you how the VIX peaked way back in the last bear market, months before the bear market ended. And so, off the lows here, playing the game, not that you would have caught the lows or highs. I didn't get into lows, but it's up 40% so far in just about a week or so there. In just the last few days alone, the bulk of that. So that's another one. Of course, the VIX itself melting off when the market rallies. And, like I said to quite a few people, someone in TVIX the other day, that the next trade on TVIX, when someone asked, how would it still be a good long, add to it, I said no. The next trade on the VIX, TVIX is a short, undoubtedly at that level. And that was just right here the other day. And you can see TVIX. This is why you don't hold these things uh, especially when the VIX is at extreme. It's given back 78. It's dropped 78% in just a week there. So great on the upside. But you don't want to. I always say this: trading VIX. I love trading the VIX, but you talk about getting your timing right. On a stock, you're trading Apple, the market even. You can be off, in early a few days, out a few days late, and still have a nice trade. With the VIX, you got to get your timing, and especially this sucker, because this one has decay. So unlike the market, you can short the stock market, and 3 months later it could be in that same level. Maybe the S&P 500 stalling out, makes a a double top high, and so you're just traded. You went sideways. But with this guy here, the decay, you don't want to hold this one. The moves in this are just, you got to be, especially trading it long, it's dangerous to short, but the moves are quick. You got to get in and out when you get those spikes in volatility, and then don't stay too late to the party, because the last one to leave the party is usually the bag holder in this one. So anywho, hopefully that was, hopefully you guys, we swung it long. I sold it way too early, closed it out, the official trade, but we still made 60 something, I think 60%. So I'm not regretting that, but anyways, I just wanted to share that, what happens to the VIX when you're holding it, and or TVIX or any of these VIX tracking ETFs when the VIX is at record highs here, or at least multi-year highs. There it is again, right back to where it was in the 2008 financial meltdown. And again, I went over that before. All right, enough on this. Talking about what could happen. Those are the levels to watch. This market moves fast. Right now, I think there's more upside. I think they're just going to pin these shorts, squeeze the shorts. And, if I'm wrong, that's what stops are for. Use your own stops depending on where you entered. Everything, all the trade ideas on the site, all the targets and the trade parameters, they're just suggestions. They're not recommendations, because everyone has different risk tolerance, everyone has different views on where they're going, and everyone might have different targets. Some of you might be targeting up here, and if you are, you can use a wider stop. If you're only targeting this early area here, and there it is on the where's the official trade. Oh, never mind. Our official trades in XLF, but that's it. If these are unofficial targets. Remember, if you're new to the site and you see T3, you don't see T3 equals. This is the line. That's the level that shows up. That's the actual resistance level. And so these are what I call unofficial trade ideas. If you're seeing targets like this, on the official trade ideas like XLF, the financials, I'll list T1 equals, and that means I've done an adjustment. I've taken a look at this. Resistance is around 1988, so I set that target, the sell limit order, a little shy of that in case everybody's watching 1988 and the sellers happen to step in early. People start taking profits, shorts start coming in to short that level of resistance. I'm not going to hold out for the last 4 cents and risk missing a fill, because when the sellers step in and something finally reverses, the reversal tends to come pretty quick. So on this one, T1 equals 2106. The resistance there is 2122. So you can see I set that one down even further, because I think that may be getting close to the end of run. And here's a potential third target if somehow I like what I see in the market internals, price action, and or any headlines that will are bound to follow this rally if it sticks. This could be just a one-day wonder here. So then I might extend that target, and I can tell you that would almost certainly be the get out of Dodge final target, and maybe even reverse and go to a short on the financials if and when we get up to that level, about 2250. Okay guys, I'm going to wrap it up here, get it out to you, and today I will follow up on the commodities. That's the next video or analysis I want to do as far as asset allocation and trade ideas. How to navigate this bear market. Looking for investment opportunities, where to put money for both active swing trading as well as trend trading. And so I'll get to the commodities in a separate video today. This has been Randy Finney with Right Side of the Chart. Best of luck on your trades today.